I still think, yeah, silver is the money of the people. Gold is more for the elites, but it's a good thing to have too, I would say. Yeah, and there's speculation. Some people say that ratio could go to 1-to-1, but I think let's go one step at a time. I think the next key level in terms of the ratio will be like 30. So let's say if gold is at $5,000 and we have a 30-to-1 ratio, that will mean $150 silver, which is not really looking at the ratio like that, it's not really outlandish. And if we go to 15-to-1, that's $300 silver.
According to seasoned market analyst Mario Innecco, gold and silver are entering a stage of transformation that goes far beyond traditional market cycles. He explains that what we're witnessing now is not a typical speculative rally, but a reflection of deep structural changes in the global financial system. The persistent weakness of fiat currencies, combined with record-breaking debt accumulation, is eroding confidence in paper assets at an accelerating pace. Innecco believes this environment is fueling a gradual but powerful migration toward hard assets, with precious metals standing at the center of this shift. Gold's recent surge, in his view, signals not just investor enthusiasm, but the reawakening of monetary realism, a return to tangible value in an era of financial illusion. Innecco emphasizes that gold's strength lies in its role as a measure of trust rather than just a traded commodity. As global central banks expand balance sheets and manipulate interest rates to sustain fragile economies, the credibility of fiat systems continues to decay. Gold, which cannot be printed or inflated, becomes the natural refuge for those seeking long-term stability. He points to how nations like China and Russia have been strategically accumulating gold, indicating that this shift extends far beyond individual investors. It's geopolitical. This accumulation, he suggests, reflects a silent rebalancing of power, where physical reserves are replacing digital promises as the true foundation of wealth. Turning to silver, Innecco highlights its unique dual nature, both industrial and monetary, as the reason it may outperform gold in percentage terms during the next phase of this cycle. The metal's growing importance in renewable energy technologies, electric vehicles, and semiconductors creates a rare dynamic where industrial demand converges with monetary demand. He notes that tightening physical supply, coupled with years of price suppression, has created conditions for an explosive revaluation. Once silver breaks free from its long-term resistance, Innecco expects it to reprice rapidly, catching even seasoned traders off guard. He warns that the window to accumulate silver at reasonable levels may be closing faster than most expect. Now, we present the clips from interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We'll focus on silver first. Silver is looking very, very good. We're fast approaching that historic 50 area. Even though back in 1980, I don't think we reached 50, but it was very close to reaching 50. And same thing goes for 2011. Most people that follow silver closely, they expect for silver to go a lot higher, that it needs to break 50. So yesterday, of course, gold broke 4,000, and I spoke about it, that it tested it first early in the morning, London time, just a few seconds, came back down to like 39.95, and then it just went up like a rocket and stayed up above 4,000 all day. Silver, even though it outperformed gold yesterday, we're still below or above the 80 level in the gold-silver ratio, and also below 1.125%, which is 80 in reverse in the silver to gold ratio. So I think that ratio level there will be broken, either 80 or 1.125%, once we break 50. And once we break 50, and it could be today, it's going to be, something quite incredible to see. It's really interesting to be alive, in my opinion, because silver has been suppressed for 45 years. And I've spoken about the Hunt brothers. And most people, when they think about the Hunt brothers, they think that they try to corner the silver market. And to some extent they did towards the end of their operations in the silver market. But if you read the history like I have, the Hunt brothers, they had an oil fortune. I think it was related to Libya, actually. And their father made they were probably one of the richest families at the time. And in the early 70s, with the OPEC crisis and with inflation going up, their revenues went through the roof, revenues in terms of fiat dollar. And fiat dollar after August 1971, and I think the Hunt brothers, the Hunt family, knew about inflation really well. They weren't silly, and but they couldn't really buy physical gold because it was illegal for Americans. Yes, some people got away with it on a small scale by sovereigns, but they needed to buy tons of gold to protect their earnings in fiat dollars. So they resorted to going for silver because silver wasn't illegal. And that's how it started back in the early 70s. And they used COMEX, but they also bought silver directly from other countries and shipped it by plane to the United States. So they had huge reserves of silver. But by 1979, early 1980, they actually had gotten a lot of people involved in the silver market. There's stories about even the Shah of Iran being one of these people, some other Middle Eastern sheikhs, even John Connolly. There's a rumor that former governor of Texas, of course, who was in JFK's limo when JFK was shot. Rumors that he was involved with the Hunt brothers because they wanted Texas to secede from the Union. And that is not outlandish because the U.S. economy was in really bad shape in the late 70s, and Texas had a lot of wealth. And if you didn't know, Texas is the only state out of the 50 states that was admitted into the Union through an international treaty. I think it's the Treaty of Hidalgo. And there's an almost automatic renewal of that treaty every year, I think on the 1st of January. And I think they're looking not to renew the treaty in 1980 or maybe 81. And they're looking to use silver as the currency to back a Texan dollar or whatever they were going to call it. So I think what happened on COMEX in 1980, and we know about this because Jim Sinclair told us about it, they basically stopped and bankrupted the Hunts in their tracks. The reason given is because they're cornering the market, and that some brokerages houses that were members of COMEX were going to fail, and so on and so forth. But I think it goes much deeper. But anyway, they basically changed the rules on COMEX. That's why I've always told people you might want to speculate in the futures market, but beware, it's rigged. When push comes to shove, the big banks and the regulators will crush anyone who challenges it, like they did the Hunts. So they basically banned buying of silver futures. So not surprisingly, silver collapsed from almost 50 to $20, $30 in a matter of weeks. And that was the end of the silver bull market. And it was only in 2011, of course, that we saw silver go back to 50. And even then, there's talk that JP Morgan was involved in smashing the silver price, which really crashed spectacularly, and that they used some of the silver that they acquired from bailing out Bear Stearns. And so there's all these things that went on on silver. And there's also silver squeeze back in 2021, where the guy from Goldman Sachs, the head of commodities, Jeff, I forgot his surname now, but he basically slipped and said how the bullion banks, they buy the ETFs for their clients, and then they go short the ETFs. And he said that they had 200 billion supply of silver, above ground and below ground. And then the CFTC, the guy from the CFTC said we had to tamp down the price of silver because it was above 30. So yes, there has been massive manipulation. Some people argued that it goes back to the 1870s, the great crime of, I think it's 1873, where actually it was the German imperial government that decided to unwind, sell a lot of their silver because they had won the Franco-Prussian War. So they're flush with silver, and that really hurt the silver price, and it really hurt the silver producing Western states as well.
From a technical standpoint, Innecco observes that both gold and silver are forming powerful consolidation patterns that typically precede major breakouts. The current trading behavior, strong rallies followed by shallow corrections, reflects accumulation rather than distribution, meaning the big players are positioning for what comes next. He sees parallels to the early 2000s bull market, when metals quietly built momentum before entering a multi-year surge that redefined valuations across the sector. However, this time, the macro backdrop is far more severe, suggesting that the eventual breakout could be even more dramatic and globally impactful. Looking ahead, Innecco envisions a future where gold and silver reassert their roles at the core of a restructured monetary order. He foresees gold moving well beyond previous highs as trust in fiat systems deteriorates, while silver could see exponential gains once industrial shortages meet monetary demand. In this scenario, precious metals would no longer be speculative hedges, they would become the new standard for value preservation. Innecco concludes that as global economies grapple with inflation, debt crises, and waning confidence in central banks, the world may be witnessing the dawn of a new era, one where tangible assets reclaim their rightful place at the center of the financial system.
I still think, silver is the money of the people. Gold is more for the elites. But it's a good thing to have too, I would say. And there's speculation. Some people say that ratio could go to 1-to-1, but I think let's go one step at a time. I think the next key level in terms of the ratio will be like 30. So let's say if gold is at $5,000 and we have a 30-to-1 ratio, that will mean $150 silver, which is not really, looking at the ratio like that, it's not really outlandish. And if we go to 15-to-1, that's $300 silver. And of course, gold in my opinion is going to go a lot higher. And talking about gold, let's talk about de-dollarization now, because back in I've got the exact date here, July 15th, 2021, I published a video about Brazil's gold reserves soaring by 62% in June. Yes, they bought a lot of gold in 2021, and they were early in the game of adding gold reserves. If you remember well, if you've been following gold for the last few years, the central banks, especially BRICS-related central banks or non-Western central banks, bought the most gold ever in 2022, net gold, since the start of the Bretton Woods. They did the same in 23, 24 as well. And this year they're still buying quite a bit too. And that is all about de-dollarization. But Brazil, for some reason, they stopped buying after 2021, which was strange. And but now news has come out from Christian Gopal, who I follow on X. And who's Christian Gopal? Well, he's the senior analyst at the World Gold Council and reports a lot of interesting data and information about gold. So yesterday he reported on X. It says latest data from the IMF shows that the Central Bank of Brazil increased its gold reserves by almost 16 tons in September. Its first edition of gold since July 2021, which I talked about 4 years ago. Its gold holdings now total 145 tons, which isn't that much, but I think this was in September. Maybe Brazil is going to keep buying a bit more. It seems like the Brazilian Central Bank or whoever's in charge of buying gold in Brazil, be it the Treasury or the Ministry of Finance or the Central Bank, they like to go all in. Like they don't do dollar cost averaging like the Chinese have been doing, 2 tons a month. So I find that quite interesting. The reason why I think Brazil doesn't have more of a bigger, let's say, gold reserves, maybe is because they're running surpluses, and gold is going to be used as a payment settlement mechanism for the BRICS countries in their trading. I think, of course, the Chinese yuan will be the major currency being used there because it's normal when the biggest economy in the bloc is China. A lot of the stuff is going to be done in yuan. But what gold will be used as is a form of settlement at the end of accounting periods for surpluses and deficits, current account surpluses and deficits. And I still think that eventually we could see these BRIC countries, these non-NATO, non-G7 countries, peg their currencies to gold. But I think that's still, how can I say, far away. That would be, of course, having some kind of gold standard. And I think that's, very probable because I think China, Russia, India, a lot of these countries, hopefully they're learning that having a fiat currency-based system imposed by one strong nation, like the United States has been doing since 1971, is not really the way forward, is not really the representative way. I don't want to use the word democracy here because I don't think it's really appropriate. I think countries are sovereign and that's it, right? So am I saying I'm pro Lula in Brazil? No, because he's a socialist, but I don't think it really matters that much. Brazil is still a very strong economy. And unlike the peso, though, the Brazilian real, and I've got numbers here and a chart.
Looking into the future, Mario Innecco envisions a dramatic reshaping of the global monetary landscape, one where gold and silver take center stage in restoring financial balance. He foresees a period in which the trust underpinning fiat currencies collapses under the weight of inflation, debt, and systemic manipulation, driving both institutional and sovereign players toward hard assets. In this new paradigm, gold could emerge as the backbone of a more stable financial system, potentially backing digital currencies or central bank settlements, while silver reclaims its historical status as the people's money, bridging industrial utility and monetary strength. Innecco predicts that as this transition accelerates, paper markets will lose their dominance, exposing years of artificial price suppression. Once confidence fully shifts to physical ownership, prices will likely move in parabolic fashion, reshaping wealth distribution and redefining the concept of value itself. If you found this breakdown useful, make sure to hit like, share it with others who follow the metals market, and drop a comment below with your thoughts. Don't forget to subscribe so you never miss the latest updates. Thanks for watching.